everyone, and welcome to the session on future venture capital and digital assets. We have 30 minutes to cover VC investing, and my goal for this conversation is to pick the brains of these investors who have been on the cutting edge of investing in digital assets, Web3, blockchain, and crypto before it was even a household name. So let's start with some notes on venture, and then I'll turn it over to Keli, Thomas, and John to give us a master class. So here's some notes. So in 2021, there were 8,315 venture firms in the US. It dropped to 6,175 in 2024. So many of the VCs left have proven models, long track records, and deep pockets necessary to weather what is no longer a bull market. These investors are making moves with a scalpel and not a chainsaw, adapting their approach to this new environment. At the same time, digital assets are gaining long-sought regulatory clarity in the US, enabling the sector to finally take advantage of the deepest, most liquid capital markets in the world. So I want to start with everyone talking about their investment journeys. I mentioned scalpels and chainsaws. So can we each start with you sharing your journey and the tools and methods that you use to approach deploying your high-risk, high-reward investment approaches? You could talk about your philosophies, your team, your decisions, your regions, your focus areas. Just give us a flavor of who you are in this VC ecosystem. I want to start with my good friend, Keli Callaghan.
Thanks,
From
Nicole.
Arrington Capital. Jump in there.
All right, Keli Callaghan, Arrington Capital. I've been full-time in this space for 7 or 8 years at this point, which I think makes me 82. My background is not traditional venture. My background is not technical. I'm not a computer scientist. I'm not an economist. I'm not from TradFi. My whole career has been marketing, comms, big brand, go-to-market strategies. I fell into crypto by accident back in the day as the CMO of a really big layer one, was one of the first folks there that was not technically, had a technical background, and grew that. When I left, it was about a $12 billion network. I've been at Arrington Capital. I've known Michael Arrington for a long time. He was on the cap table of where I was previously, was always very supportive, was always good for advice, introduction, helping to support. And so when it was time for my next chapter, he said, come join the fund. We're a hedge fund. We have both a liquid trading side and a venture side with over 300 private venture investments at this point. I think what's interesting about the space is that we're very flexible. We have the ability to invest in anything, and we've been really good at picking really strong teams. We can do DeFi, we can do DePIN, we can do RWAs and everything in between, infrastructure, dev tooling, enablement. And I think what's great about this space is that you can pick the team and they can pivot. Everything is moving so quickly right now that you can pick teams that are very technically sound and able to move quickly and adjust quickly given what the market's doing. I think the other thing I like, given the fact that I'm not technical, is being able to invest in teams that understand the ethos of community building in crypto. We get pitched all the time, constantly. 30 to 50 deals a week, and very technically interesting and technically advanced founders, but if they're not open-minded enough to sort of dive in and build out with go-to-market and community, it's a huge miss, and you have to have that as part of an element. I'm passionate about that just because it's my background, and being able to find those founders that are also aligned with that is really important.
Great. Thomas J. Lee, Fundstrat, Chief Investment Officer. You advise lots of clients, lots of investors across the space. You're moving capital into this area. Can you talk about your strategies and approach to this digital assets?
Glad to. Our approach is a little different because our expertise is not just digital assets, but it's really broad markets. We've been doing research for over 30 years. But in technology, and the way we look for the big opportunities, and we advise more than 300 hedge funds and about 10,000 family office and RIAs. So we're not trying to find sniper shots or rifle shots for folks. We're trying to find the big trades that are, 100x. And the lessons that we learn or that we sort of apply as a filter really look at previous disruptive technologies. And I think maybe the three simple ways I've sort of described how we're applying this lens to crypto, and Sean Farrell actually looks at specific projects, is that if you look at the wireless industry, for instance, which was a huge disruptor, right? It replaced the landline industry and went from, when I started covering 30 million users to 9 billion. There was a huge ecosystem of players, from infrastructure to handsets to chips, carriers, operating systems. But all of those stocks and venture projects peaked only like 10 years into the industry's hockey stick, which grew for 30 years. And the only thing that continued to grow in value are two things. One is the spectrum itself and the tower industry. The second big takeaway, or the first takeaway from that is basically you want to find something that grows with the unit consumption. So if we're thinking crypto is replacing digital money and all the future use cases, you want to find something that doesn't have a cost curve that makes it impossible for you to capture value. The second is that it's not the first movers that always win. I mean, Apple is a great example of how they've essentially dominated and as a stock has massively outperformed anything that was wireless, but they were 15 years into the wireless industry and they came along and developed a way to actually integrate everything. And if you look at the tower stocks in Apple, by a country mile, they've captured all the value. And the third is that a lot of people tend to think because they have like a units belief, like, because we know crypto adoption is going to grow, that you want to buy the thing that grows the fastest. And an example would be, let's look at the S&P. The big story arc the last 15 years is that there has been a shortage of labor. So you'd think, oh, well, I'll be a company that supplies actually human labor, like staffing stocks. The last 15 years, they've underperformed the S&P broadly. The single best way to have played labor growth over the last 15 years is Domino's Pizza. So you're better off feeding the workers, not supplying the workers. And so I think when you think about where value is captured again in crypto, it's not always where the units are growing.
John Darsie,
Thank you, Nicole.
Skybridge, SALT, give it to us.
Yes. I'm John Darsie. I'm a partner at Skybridge, which is about a $3 billion asset manager. I'm also the CEO of SALT, which is sort of our conference series and media platform that we created. Skybridge is about 20 years old. We come to this space from a traditional asset management background. So we just celebrated our 20th anniversary. We traditionally are a fund of hedge funds that sort of the way we invest at Skybridge is very thematically and very concentrated when we identify a theme that we like. In about 2017, like many other people, crypto, digital assets became more on our radar. We performed due diligence on a lot of leading crypto hedge funds at the time. We talked to our LPs and we said, hey guys, we're thinking about allocating to this digital asset theme. What do you think? And we do a lot of distribution through wirehouse channels like Morgan Stanley, Merrill Lynch, UBS, Wells Fargo. And the reaction, as you might expect, was, hell no. We do not want to see this exposure in our portfolios. So we sort of sat on that research and due diligence for a few years. COVID hits, it's 2020. We decided to go big and make digital assets the largest theme in our portfolio. So today, after putting on legging into a trade of about 40% exposure to the digital asset space starting in October of 2020, about 60% or 60+% of our overall $3 billion AUM is allocated into digital asset related investments. The majority of that is Bitcoin. We have over $1 billion of exposure purely as a passive bet on Bitcoin. We think that's the alpha predator in the digital asset space, but it's also served as sort of our gateway drug to a lot of other interesting use cases in the crypto universe, if you will, which includes primarily for us allocations to layer 1 protocols. So we're large investors in Avalanche. We like to identify layer 1s that have a unique value proposition. I think all of them would purport to have some unique value proposition, when I think most of them probably don't. And so Avalanche is one that we think the custom layer 1 solutions are novel and interesting. Most recently, we made a large investment in TON, the Telegram Open Network, or was called the Telegram Open Network. We think just the network effects from being affiliated with one of the world's leading messaging apps is huge, and adoption is accelerating. Grok AI just integrated with Telegram natively. So that's an interesting one. We invested in Polkadot. We think the decentralization they've captured is extremely exciting. So our investing, as well as investing in layer one protocols, we also allocate very heavily to a lot of leading crypto hedge funds and hybrid funds. So we are among the largest LPs in funds like Brevin Howard Digital and Multicoin. We've invested in Polychain. We've invested in Pantera funds. We've invested in Galaxy funds. So our exposure is sort of spread across these layer one investments, Bitcoin, and LP investments in leading funds. And I think, on the SALT side of my ledger, we sort of use these events as a way to meet interesting founders, to meet asset allocators and educate them on why they should be allocating into this space. And I think part of our unique toolkit is our ability to interface with tons of different companies across the digital asset ecosystem and sort of serve as an institutional bridge between the traditional finance world that we occupied for the first 15 years of our existence and sort of this decentralized finance universe. So we sort of use SALT as a strategic business development tool to support funds that we invest in, to support founders that we invest in, and to educate allocators on why this space should be part of their investment toolkit.
I think that's great, John. You lead me to a second question. So venture has a formula: 100, 10, 1, 100 pitches, 10 due diligence, and 1 you pick. Curious as to the three of you all, if you can give us like the unique characteristics of the one investment you pick out of the 100 that you've seen with respect to that formula. Give us some of the nuances of why that one that comes around to you say, okay, that's the one I'm going to pick. Maybe John, you started with some of the, Pantera, Brevin Howard, layer ones. Give us like why are those number ones in your regard?
Yeah, I think a lot of it comes down to people, to be honest. Is if you look, let's take the Avalanche team as an example. Emin Gün Sirer, the founder, one of the early fathers of cryptology, extremely talented. He's put together a very talented institutional team behind him with John Wu as the president, John Nahas as the chief business development officer. I think, from a starting point, the technology has to be novel and interesting, and then you have to have a team that's built around the technology that we think will allow it to scale. I mean, if you look at Tan, you look at the Durov brothers, they are obviously among the world's greatest innovators and technologists. So for us, it largely comes down to team. If you look at the asset manager side, if you look at Kyle Samani and Tushar at Multicoin, seed investors in Solana have identified trends in this industry very early. Dan Moorhead, Bitcoin OG, extremely talented manager. You go down, you look at Alan Howard, he's another one that comes from more of a traditional finance background who's been enlightened on Bitcoin and digital assets from an early stage. So for us, both in terms of investing in protocols and investing in managers, it's all about the people. And, the crypto industry, an interesting thing about the LP investments that we've made is that in 2017, part of our calculus for not being earlier to the space was concerns about operational due diligence that we did and the amount of self-custody that existed in the ecosystem. So I think another thing that we look very closely at now is just sort of the institutionalization of this asset class. I think it's made us more comfortable allocating to funds and projects in the space, and I think as we go around talking to institutional asset allocators, I think the fact that, one, there's regulatory clarity, and two, that the custody solutions and all just the security around those investments has improved dramatically, I think will lead to a lot more institutional asset allocation into the space.
Keli, who rises to the top and why?
I think teams I've mentioned that, it's been brought up again. I think the other thing is teams that understand how the value accrual works and how the token economics work in a way that makes sense for the community, makes sense for participants, people who are using whatever the protocol or whatever the product or service is. I'll bring up one. We do really early, so the earlier the better. So very frequently we're investing in 1 or 2 technical founders with very small teams and very small, the beginnings of an idea. Redstone's an investment we made last year. They're a push-pull oracle, so basically in a nutshell, everything that is happening in the real world needs to come on chain, and everything on chain needs to go back to the real world. So an oracle that shares this data flow back and forth. That team, technically sound, great at community, excellent at partnerships, excellent at integrating across the entire crypto ecosystem. Value accrual, the token economics make sense, and generally speaking, they're really good at telling the narrative of what they're doing and what they're building. So that's sort of one example of something that checks all those boxes.
And Thomas, who rises to the top in terms of your advisory and which picks that your investors should go for and why?
I think almost everything has been said, which I agree with. It does start with the founder and the team, and importantly the community. But I do think things are going to change a lot in the future, because what used to matter was a team that had really good technical skills and they could develop code quickly. I don't know if that's an advantage anymore, and I think it's really going to be, of course, as you know, a lot of projects that end up successful actually are very lucky because the world forked in their direction, and I think that's going to be the case. And the difference is that as crypto regulations really become easier, and it's actually becoming a much more traditional payment rail and a financial rail, and eventually I think the backbone of a new financial system, there's going to be a lot of traditional players entering the space. So I think whatever projects people want to develop have to be in the context that it's really a way to develop on-ramps and then protect future trust vectors. So it's going to change.
So you mentioned technical doesn't matter. Well, it does matter, but it's not necessarily an advantage as much as before. Are you talking about the artificial intelligence effect, or what's the piece for technical?
I think all of us would have perspective, but I think pure coding skills aren't going to be as important, and I think it's going to be someone who, it's like Wayne Gretzky, someone who just knows where the hockey puck is going. So I don't know what the future rent-seeking model looks like, but I think it's going to change a lot.
Does anyone want to talk about that?
We're seeing a lot of our portfolio companies use AI or other generative forms to go to market faster. They can just do things faster. So the idea is there, being able to see where the hockey puck is going, but how they build it, how they develop it, how they test it, how they iterate on it, I think those things are all going to accelerate pretty quickly.
Oh, and maybe one thing I would just add is, you've seen it time and time again, someone who makes a good UI ends up having a huge advantage. Let's just take Robinhood as an example. I think a lot of people might think that the product is kind of a joke, but at the end of the day, they've done so many improvements, and now they're actually entering so many markets, and it's really because they have one of the best UIs.
So I want to turn to regulation, legislation. We're here at the Blockchain Summit. There are several, and there are many congressional government officials here that are here talking about crypto, digital assets. I think this is just a moment in Washington, D.C. that I think crypto and digital assets wanted to see, so we're here. So just want to get your sense of, are the first steps you're seeing from this, tell me about the first steps you're seeing from this administration, regulators and legislators. Do you see it as promising, and what more do you want to see as an investor?
I think the administration and the team around digital assets in Washington has done a tremendous job of innovating on regulation, but in a responsible way. I think there was a lot of talk about strategic crypto reserves and which coins are going to be in it, and everybody's jockeying sort of out of their own self-interest for what they want the regulation to look like. But I think David Sachs and his team have done a great job of focusing on the right things, which obviously we're biased given our belief in Bitcoin as the core asset of this ecosystem, but a focus on Bitcoin as the strategic reserve, very important. The thoughtfulness that we've seen from members of Congress and their teams on drafting the stablecoin legislation and now working on market structure legislation, I think everybody's doing it in a very responsible way. I think there's been some other stuff that maybe hasn't been under the control of David Sachs that have gone out, whether it be meme coins or talk about adding other coins more aggressively to strategic reserves that have been a little bit of a distraction. But I think the core team that's working on these issues in Congress and in the executive branch have done a great job of attacking these problems in a responsible way.
Kelly, you want to jump in on DC happenings?
Yeah, it's come a long way. I'm not really a DC person. I'm a Boston girl by birth. But I think there's been obviously progress. This event isn't really shunned by anyone. I think we've come a long way. I do think that it's going to take a little bit of a turning tide for it to trickle down. I think most notably to me over the past couple months, I do a lot of help with our portfolio companies, hiring. We have open roles at the firm, and the college and post-college grads who are looking for jobs crypto's still not okay. Even at like the blockchain club level, they're not really, I've talked to a lot of them, so I'm making very broad generalizations here, but I think that because crypto for the past couple years has been not something that people should be leaning into, I think there's been a gap in students that are interested. I think AI has been the shiny object, and I think we're in sort of this weird spot where the blockchain clubs aren't as big or as informed or as knowledgeable as they used to be at some of these colleges and universities. I think people coming out of school are not thinking of decentralized areas as areas that they should be going into, and I think that's hard. That's hard for me to see. That's hard for me to see for our founders that are hiring. That's hard for me to, talk to a potential junior analyst that doesn't understand the difference between proof of work and proof of stake fundamentally. And so I think that needs to shift too, and that will make a big difference. And I'm hoping that, what we're seeing here sort of trickles down into the up and coming generation of people entering this space.
I'd love to, in these last couple of minutes, talk a little bit more about Bitcoin and the Bitcoin effect, the volatility of Bitcoin. I mean, there's been conversation around Bitcoin being more a speculative asset, but there are those who believe that Bitcoin is essential to the blockchain network. I'd love for maybe, Thomas, you've been bullish on Bitcoin. You've made lots of predictions. I'd love for you to just go through your thesis on Bitcoin as it relates to blockchain digital assets sector.
Well, Bitcoin, I think, actually relates to the previous question, because, now that crypto is being embraced by more the traditional financial system, the thrust of all of this is still the idea that code is law, which is now opening the door for a lot of exploitation. I think it's going to be very dangerous for consumers over the next few years, because crypto is going to take advantage of people who aren't familiar with the need to protect their keys, or they're going to be victims of rug pulls. It's the same dangers that are happening with AI, because with AI there's no, moral governance, and so I think AI could be quite dangerous, and it's, there's no rating system to protect people, which is why I think ultimately Bitcoin is going to still remain the most trusted vector in the crypto space. It is not centralized. It is it's a blockchain that hasn't been defeated, and even today there's been 0 fraudulent entries on the Bitcoin blockchain. And to me, I think it's actually positive that a company like MicroStrategy has accumulated so much Bitcoin. I know some people view MicroStrategy as somewhat dangerous to the crypto industry because they're close to accumulating. Ultimately they want to get at least 5% of Bitcoin out there. But the reason I think you're actually better off with MicroStrategy accumulating Bitcoin is that it's ultimately what I'd call a sovereign put on the crypto space, because at the end of the day, MicroStrategy is like a company that has accumulated all the best spectrum in the country, the top 50 cities. And so that entity is always going to not only have a premium value to any other holder of Bitcoin, but if the U.S. government decides that it needs to actually have a big exposure to blockchain, they'd own MicroStrategy. So I think Bitcoin remains the safest way for a lot of consumers to get exposure to crypto, and I think it's going to be tough for the next few years because of the deregulation is not really providing consumer protections.
So for the last question, I want you to answer. Visionaries, right? You have to be a visionary to be an investor. You kind of have to figure out where are you headed, where are you going, and I would just want to get a sense from you all. What's the end game? What are you investing towards? What's your venture heading to? What kind of transformation do you want to see? What kind of interconnectedness do you want to see around the world? Just want to get a sense of you're investing in this space, and what are we building for?
Well, first and foremost, we invest to make money for our investors. So, everything that we do is through that lens because we have a fiduciary responsibility to our investors. So we're investing in assets that we think are going to appreciate. That is number one. But we think that crypto, blockchain, digital assets have a chance to disintermediate a lot of the global financial system in a way that investing in those protocols and the assets that are going to drive that disintermediation not only make money for our investors, but also unlock value for individuals and consumers. So we think this push towards a stablecoin based U.S. dollar and a tokenized market-based framework is a really positive thing. And so we're doing, from a SALT side of things, we're doing an event in Bermuda in May where we're trying to make Bermuda sort of the first pilot in terms of creating a closed-loop blockchain-based economy where you're not paying credit card fees, where there's less friction around payments, there's greater access to banking services in a more seamless way. And we think if we can achieve these types of pilots in small markets, then it can be exported around the world. And so yes, I mean our primary objective is to make money for our investors, but we think a blockchain-based global financial system with stable coins, with tokenized securities and real-world assets and things like that is a better system that allows fewer toll takers to suck value out of individuals and consumers.
All right, Thomas.
Well, we have the same goal. We're trying to make our clients the best risk-reward adjusted opportunities. For crypto, it is a very new space for many of our clients because they're traditional investors who want to protect their wealth. They don't necessarily want to make 100x on every opportunity. But when we look at the next 10 years, I think crypto and Bitcoin easily is going to be one of the best opportunities because, one, I think it's going to easily outperform equities and real estate and other asset classes. But because of the disruption and the innovation of blockchain, I do think it just ultimately first replaces a lot of the financial rails, which is a 4% of global GDP. That's a $4 trillion a year revenue opportunity, meaning crypto's addressable market cap is 40 trillion, and it's 2 trillion today. So easily a huge multi-bagger from just looking at the financial system. But over time, as we know, reputation and a company like Amazon, the consumer is not going to necessarily distinguish dollars or reward or loyalty over time. So I think over time, as you start to look at reputation, that's really the next big wave of opportunity for crypto. So a lot of opportunities.
Keli, last word.
Tough act to follow, and I'm assuming you have something brilliant to close us out with, so I'm not the last word. We look at everything. We look at everything from, real-world, tokenized real-world assets, exposure to sports teams and leagues, like DeFi, infrastructure. There's so much. And I think if I really boil it down, like the past couple years, there have been some, which token is going to the moon next, or, my comments about talking to recent grads, and it seems like all you need to know is to pick the next token that's going up. But I think where we need to go back to is sort of the fundamentals of what blockchain is, and that's, decentralized access, and it's providing more opportunity for more people to participate in different economic systems, whether that's a decentralized version of live streaming and Twitch that can fix some of those problems, both technically and have more people exposed to the upside of that, or tokenized treasuries, right? And so I think if you look at, to your point, Thomas, on the sort of the market size and the opportunity, it's huge, but I think it goes back to fundamentals of all of these different models that allow more people to participate, that bring more capital in, and that sort of grow the whole space and make a lot of different industries disruptive with it.
Well, the future looks bright, and I want to thank these investors for giving us their masterclass on the future of venture capital and digital assets. Please help me.
Thank you,
them.
Nicole. Thank you.